Hi, good afternoon, everyone. Welcome to another call in our regular NFO series. Today, we have a special guest, Mr. Manish. He heads the product vertical at ICICI Prudential AMC. We are already in the midst of the new NFO, which is the ICICI Prudential Quality Fund. So, today, we'll try to uncover some critical insights about this fund so that you can take a call how this fund fits into your mutual fund portfolio. Welcome, Mr. Manish. Thank you
Thank
so
you.
much for joining us.
Thank you. Thank you for having us here. It's a privilege always to speak. Thank you.
Great to have you back. We'll start off with the first question. How does ICICI actually define what is quality, and how do we actually filter out in terms of the parameters basis which we define the quality stocks for the portfolio?
Sure, absolutely. That's very important question because we use quality so loosely in our life. Like this is a quality food, this is a quality dress, etc. So quality we use it so loosely. But when it comes to quality and defining companies based on quality, there are certain characteristics or traits which we can look at in terms of quality when we
Yeah,
define. Very
yeah,
broad are like you talk about certain companies having a very strong brand image that can be a part of quality. Like
yeah.
brand image can be like if I give you a very simple company example, like when we talk about Atta, there is one Atta which comes into your mind that is like a strong brand image. When we
Yeah.
talk about the noodles, there's a particular noodles which comes into your mind first. Or when you talk about any baby products, one company's name comes very easily. So that's all strong brand image. That's one quality.
Yeah.
Having a very big customer base is also sometimes called as a very strong quality feature. So companies like airline company, which has a major share in India, has a very wide customer base, or a telecom company which has a very strong customer base is their strength. So this is something like that. A company which sustainably grow their profitability, irrespective of whatever economy we are in. So there is a, let's say, a power generating companies. They have very stable profit. So these are certain traits I can say companies which showcase brand image, very consistent profitability, big customer base, very strong balance sheet. These are
Okay.
certain aspects which you can say, oh, this is a good business.
Okay.
And we have our own filters to define quality very specifically. Like I can give you a few examples,
Yeah. Maybe
uh,
some critical ones.
like return on equity is one,
Yeah.
return on invested capital, the debt
Okay.
which is there on company's balance sheet, the cash flows which they are generating. These are certain aspects which we look at very closely when defining
Can
quality.
you maybe specify some metrics like maybe what is the ROE we look at, like 15 or 20 or more than that? Any specific?
So it actually it's not just one. It depends on sector to sector. It depends basis company to company. So there
Of
is
course.
no defining thing.
Got
But
it.
at least what we will do is endeavor would be whichever quality companies we are buying, we will our endeavor is to they will have all the quality parameters which is better than the
Understood. Of
broader market.
course.
If
Got it.
you're focusing on a particular sector,
Hmm.
the criteria would be compared to that particular sector, that company should have the best quality parameters. Like,
Got
for
it.
example, cement, if we talk about
Got it.
cement, all the sector, what is the quality parameters, the company which we are selecting, our endeavor would be its quality parameters should be better than. So it is
Better.
more like a relative, yeah.
So the top quartile in every sector, basically. That is what
top
makes CI.
top quality in all these parameters which are there, they would be showcased in this.
Wonderful. Great. Great. So that gives us some perspective on what actually is quality. Next, why do you think this is the right time to launch a theme like this?
Absolutely, very important question. I think
Yeah.
because
Yeah.
investor would be thinking that key, why quality today? Why not 2 3 years back? Why 4 5 years back? Because
Yeah.
quality is quality companies, right? So what we believe, and
Correct.
there's a very famous quote which I like, and I'm kind of quoting it here again. And this is Warren Buffett quote, which he says that whether you're buying quality socks or quality stocks, I would always like at a good price. So when
Correct.
you're buying quality companies, it should always come at a good
Good.
price. Now, what has happened is that quality companies has underperformed for the last 5 years. Post COVID, if you look at the most of the quality companies or quality as an index, if you look at, has underperformed the
Yes.
broader market and other styles in a big way.
Big way.
Big way. So the quality companies are available at a reasonable valuations compared to others. So
Okay.
that is one biggest reason today that after 5 years of underperformance, quality companies are available at a better valuation. So
Better value.
entry point of quality is extremely important. If you buy quality companies at expensive valuations, you
Right.
have a tough time. So that's the biggest comfort for us today. They have corrected, they have underperformed, valuations are reasonable.
Okay.
Now, second important point why quality today. So one is valuations, which I've just highlighted. The second biggest important factor why quality makes a lot of sense is that quality as a style always does well when things are much challenging. Whether we are talking about globally in
Yeah.
terms of growth,
Right.
tariffs, geopolitical tension, or when there is domestic challenges, whether the growth is moderating, earnings slowing down, tensions are there. In this kind of a challenging scenario, quality as a style does well. The reason is simple because people prefer in challenging times companies which have stable balance sheet, better cash flows, market share
Right.
leaders. All these are traits in a challenge. People
Okay.
move, and that's
Okay.
why normally quality as a style does well in this kind of a challenging
Okay.
environment. We believe today we are in an environment which is not as easy what we have seen. So it's more challenging, and that's why that's a big trigger for
Hmm.
launching.
Correct. Makes sense, I guess. I guess timing is very important, as rightly quoted by Mr. Buffett and pointed out by you. So, when we look at quality, there is this preconceived notion that quality only refers to large companies or defined as how SEBI defines it, 50, 100 companies. So, for this particular fund, what will be our universe? Will it be only large cap? Will it be large, mid, and small cap? And what can be the approximate, exposure to mid and small cap if they do get a place in the portfolio?
Yeah, so this is again a very important question because when you talk about is quality limited in terms of its market cap or sector, so I would clarify that at this point of time, when you talk about a style like quality, it is absolutely no restriction or there is no boundary for it because quality company can be in large cap, quality company can be in mid cap, quality company can be in small cap. Like if
Absolutely.
I give you an example, like chemical companies
Hmm.
mostly are mid and small cap oriented, and you will get phenomenal quality companies. Lot of pharma companies, although they are big, large cap pharma companies, but even in mid and small cap, you will find very good quality pharma companies also
Hmm.
in the mid and small cap space also. So quality as a theme can move anywhere, large cap, mid cap, small cap mix. And similar is the approach. Quality can be in pharma company, quality can be in IT, can be in banking, can be in cement. So there is absolutely no restriction on any sector or theme also. Quality can be available
Yeah.
in. So that would be the approach in this portfolio also. It is completely market cap. It has the complete flexibility to move. Sector-wise, it has complete flexibility to
Yeah.
move. This syncs very well with our overall house view of ICICI Prudential Mutual Fund that in this challenging environment, in this kind of situation, we like schemes which have the flexibility to move large, mid, and small cap. The schemes which have flexibility to move between sector. So,
Okay.
because what happens if you feel that there is going to be a challenging situation, the growth is going to slow down, or earnings, I'm just giving you a hypothetical kind of a situation. In that,
Yeah.
the fund manager should have the complete flexibility to, let's say, position the portfolio more towards large cap or
Hmm.
position the portfolio more towards FMCG pharma or something like that, which are more defensive in nature, which are more
Okay.
towards protecting your downside. So,
Okay.
flexibility is the key
Okay.
and scheme enjoys that. The second part of your question, which you have asked, how much mid and small cap age or exposure we will have, I'll tell that today we are more positive towards large cap because of the valuations. Mid and small still believe valuations is high, and margin of safety is not much there compared to large cap. So this portfolio is also going to be biased more towards large cap. Uh, Maybe I can say in a zone of 70 to 80% would be large cap, and rest can be mid and small cap. This is in an ideal condition we will create, uh,
Okay.
but the portfolio is yet to be created. But like I said, it would be more biased towards large cap at this
Okay.
point.
Okay. Great. Great. That gives a lot of perspective on the market cap matrix of the portfolio and help our partners and investors decide on their overall asset allocation accordingly. So now coming to the final part. So what kind of investor can look at allocating to this fund? Like what would be the duration, ideal duration for this fund, and what is the benchmark which we are trying to track for this fund? The primary and secondary benchmark, if we have a secondary benchmark.
Yeah. So benchmark is a easy question. I'll take it because it's just one liner answer. So that is Nifty quality 30 is what we are taking. Nifty 200 quality 30 is the
Okay.
index over here.
Okay.
And the secondary benchmark is the broader index. Nifty 50 TRI is what we are going to take. Right? The question which you have asked is that what kind of a risk appetite, what kind of a customer tenure we should look at. See, any equity schemes we would recommend at least to have 5 years minimum. That's a good space for any customer to create good kind of an experience. So at least come with a 5 years kind of an investment horizon. Now, the second question, which is very, very important, what kind of a risk is there in this market? So, in the diversified equity space, I would very comfortably say that this is not a very high risk in the diversified space because here the flexibility is there to move
Okay.
between large and small cap. Flexibility is there to move between sector themes. So, accordingly, the portfolio can be positioned. And third theme, which is important, is that you're going to invest in quality companies. And what we have seen historically, that quality companies in tough period in a challenging environment does well. The reason is because these are companies which are having market share, leadership, strong brand image, very consistent profitability. So what happens in a challenging environment? These are companies which are well prepared to handle
Mhm.
any unforeseen events or economic cycle.
Mhm.
So these
Okay.
companies are positioned, or they have, in a way, their kind of create, or they are made in such way that they can navigate the challenging environment in a much better way. And that's why the portfolio out of quality companies, their risk reward ratio or the risk reward benefit is much better compared to the normally a diversified equity scheme. So that's why for investors who have a more focus on risk reward, then this kind of a portfolio or this kind of a investment in this kind of a scheme.
Mhm. Is a good. That's great. That's great, I guess. I think that's a very good perspective on in dissecting this upcoming NFO. Our partners can benefit a lot by understanding the key metrics and allocate the same accordingly in their clients' portfolios. So I would like to thank you so much for taking your time, and we look forward to hosting your games.
Sure. Thanks a lot.